Hey there and welcome. So you know how banking works? Or you think you do? Today, we're going to follow the money inside an Islamic bank. It's a journey that follows a totally different map, one that's governed by a unique set of principles. Let's see where it takes us.
We all do it, right? We put our money in a bank account and trust that it's being handled properly. But what actually happens to it? Where does it go? Well, in Islamic banking, the answer is always tied to real-world activity. And that's the journey we're about to go on.
So here's our roadmap. We're going to trace the journey of a fund through 4 key stages. First, we'll look at the core principles that are the foundation for everything. Then, we'll see how that money helps finance our everyday lives, how it gets used to power the whole economy, and finally, we'll get to the big question. What's the ultimate purpose behind it all?
All right, first things first, the foundation. Before even a single dollar gets used, it has to pass through this filter of core principles that come straight from Sharia.
Okay, this slide really gets to the heart of the matter. Conventional banking is often about money, lending money to make more money. Simple as that. Islamic banking, on the other hand, says, hold on. It insists that money has to be tied to a real, tangible asset or some kind of genuine economic activity. It's a completely different philosophy.
And the central pillar holding up that whole philosophy is the prohibition of riba. Now, to put it simply, this means any and all forms of interest are off the table. The entire system is designed to avoid making a profit from just lending money, because that's seen as an unjust gain. And believe me, that one rule changes everything.
So, if you can't charge interest, what do you do instead? Well, you channel that money into contracts that actually build things. You create assets, you share risks and rewards fairly, and you support real trade and entrepreneurship. The whole point is to align with the bigger socioeconomic goals of Sharia, trying to build a more productive and fairer economy for everyone.
So, with those principles in mind, let's move on. Let's see how this all translates into actual products that you or I might use for some of the biggest purchases in our lives.
For most of us, buying a home is the single biggest financial step we'll ever take. So how does an Islamic bank make that happen without giving you a traditional interest-based mortgage?
They use some really clever structures, like these two. With a diminishing partnership, the bank actually co-owns the house with you. Then over time, you gradually buy out the bank's share until you own it 100%. Another way is a deferred payment sale, where the bank buys the property first and then sells it to you at an agreed-upon price that you pay in installments. See the pattern? In both cases, the bank is dealing with the house, the asset, not just loaning out money.
And that exact same logic, that focus on the asset, applies just as well to another big purchase, getting a new car.
A really popular model for this is the lease-to-own structure. Here's how it works. The bank buys the car you want and then leases it to you for a fixed period. Once that lease is up, the ownership of the car just transfers right over to you. Once again, the financing is directly linked to the car itself. It's a perfect example of that asset-backed principle in action.
So what about other things, like maybe some personal financing or even a credit card? For that, a structure called tawarruk is often used. Now, this is a bit more complex, but basically, the bank helps facilitate the buying and selling of a real commodity, like metal, on the open market on your behalf to generate cash for you. It's a very smart way to provide liquidity without just giving you an interest-based loan.
Okay, we've seen how it works for individuals. Now let's zoom out and look at the bigger picture, how these funds are put to work on a massive scale to fuel businesses, create jobs, and really support whole economies.
Islamic banks are involved in pretty much the entire business life cycle. They finance the trade of raw materials, they provide working capital to keep businesses running day to day, they fund huge infrastructure projects, and they support the small and medium-sized businesses that are really the backbone of any economy.
But it goes even deeper than just financing assets. Islamic banking has this really unique approach to partnership, and this is where that principle of risk sharing really comes to life.
So check this out. In a musharaka, which is like a joint venture, the bank and the entrepreneur are true partners. They both put in capital, and they both share in the profits and the risks. Then there's mudarabah. Here, the bank provides the money, and the entrepreneur brings the know-how. If things go well, they share the profits. But if there's a financial loss, the bank, the money partner, is the one who bears it.
Now, we've got to add a quick dose of reality here. While these partnership models are kind of the gold standard in Islamic finance theory, they're actually less common in the real world. Why is that? Well, because they require a lot more hands-on work from the bank, more monitoring, more complex risk management.
So often, the simpler sale-based contracts we talked about earlier are the more popular choice.
And that brings us to our final section. We've seen the rules, we've seen the products, but what's the point of it all? What is this system ultimately trying to achieve? The end game is to create a real positive ripple effect in the economy. By financing homes and cars, the system supports individuals. By taking on risk and partnering with entrepreneurs, it stimulates innovation. And by funding big projects, it helps push national development forward. Every use of funds is meant to have a purpose that goes beyond just making a profit. And you know, this quote from our source material really just sums it all up perfectly. The whole system is built around this idea: a commitment to finance that is ethical in its principles, asset-backed in how it works, and socially responsible in its ultimate impact. So we'll leave you with this final thought. The model of Islamic finance presents a system where every single financial transaction is connected to something real, a real asset, a real service. It kind of makes you wonder, doesn't it? What would our global economy look like if all finance was tied directly to tangible, real-world growth? Thanks so much for watching.